Welcome back, my awesome people. In today's episode, I'll be going over some tips and strategies to not get burnt out by the stock market. The ups, the downs, the hypes, the gossip, the pumps, the rumors, the speculations, the manipulation, the envy, the hatred, the ridicule, the sleepless nights, the gains, the losses, the politics. And for those that bought Bitcoin while it was near its all-time high, I'm sure you went through all of these emotions. But all in all, it's been a difficult year for all investors. Whether you were up big or down big, it was still a hectic few years. The 3-year anniversary has just passed since the world officially went into lockdown. From stores to religious services to crossing borders and even limiting weddings and funerals. But through all these hardships, the stock market continued to massively rally and hit all-time highs, even after the major crash in mid-March of 2020. From fear of getting sick from COVID to not being able to be social with family and friends and the fear-mongering constantly repeating on the news, we've all been stressed to the max. And now, to top it off, we're watching the stock market take a wild dip while many investors hang on for dear life as the plunge that recently happened created havoc for many portfolios. Remember, my awesome people, the mainstream news feeds off of negative news, and the topic of a stock market crash is a great moneymaker for them. So take the information from the news with a grain of salt and do your own due diligence and research and planning, and don't rely on the television. 1 week it's this, 1 week it's that. The news never ends. Even legendary Warren Buffett can't time the stock market crash. If you could time it, there wouldn't be a crash. You can't tell when there will be a road accident until it's too late to hit the brakes. However, you can take the precautions to reduce the impact of the crash. A market crash is when investors panic and start selling in bulk. They lose confidence in a stock because the business environment is beyond the control of companies. In the 2009 financial crisis, investors lost confidence in the banking system and only trusted cash in their hands. In the 2020 pandemic crisis, investors lost confidence in businesses' capacity to withstand nationwide and global lockdowns. But the stock market recovered rapidly as the government put stimulus money in hands of millions and millions of people. Regardless of whether a crash will be in a few months or a few years, the ups and downs of the market is not unavoidable, but your stress level is. Mental health and financial experts alike say both your mind and your portfolio are connected, where your emotions will run high as your portfolio goes red and excitement gets created when your portfolio goes green. And we all know that the market constantly goes up and down, which will mean that your emotions will also be going up and down constantly. And this is a reality for many day traders and swing traders as they go through this emotional roller coaster, and it can be exhausting. Investors often make the mistake of thinking that just because they are tired and in need of some rest, the stocks will act the same way. Wrong! Stocks don't care much about our wants and needs. It is us, the people, that need some time to reset and not the market. So don't be overwhelmed about this market because you feel tired. So here are my ways of reducing stock market stress and keeping your mental health safe and positive, especially in an unknown and volatile market like we are in now. The first step to getting a grip on your stock market stress is to unglue yourself from all the information that's out there. In other words, turn off your TV and shut down the computer. There's a temptation in times of high market volatility to keep that ticker rolling. But it's in these times particularly when it's best not to spend too much time following the market. Be aware of the data, of course, but not so aware that you're reacting to every gain and loss. When you do that, you have a tendency to make sporadic decisions. Instead, leave the house, get up from your desk, go out for lunch, and don't look at the TV first thing in the morning or last thing in the night before you go to sleep. Distance will give you perspective. The second tip is to think twice before you follow the herd. Avoid the knee-jerk reactions of other investors. If you hold off from making a quick decision, things can change. If you do what everyone else is doing, you're running up your stress. So do your own homework on your stock purchases. If you do your own homework, you'll have more faith in yourself and in the market. Remember, my awesome people, the market will bounce back. It always does. It's always been on an upward scale. And these stock market fluctuations may not only be leaving your portfolio bruised, but on your general outlook on life as well. Why? Well, because people by nature want to have control over their environment, and in the absence of control, we tend to second guess our decisions. We start to get anxious and start blaming ourselves or anyone else we can think of. And as you know, no one is able to have control of the stock market. And that lack of control can take a toll on your mental health. For example, the 2020 market crash had a real impact on people's life choices, and decisions had to be made. For many people, life plans needed to change, including not being able to retire early. Another part of taking care of your portfolio also includes taking care of yourself and watching your health. Get your exercise, take your vitamins, watch your diet. Anything you can do to keep yourself physically healthy helps you withstand mental stress. But remember too, that stress on a short-term basis is not a bad thing. Stress is your body's natural response to some type of change. Stress is healthy. It's a wake-up call that something has changed. It's when stress becomes prolonged, that is when it becomes dangerous. So, Jacob Rant, are you telling me to stop investing? No. My awesome people, I am not saying stop investing, but what I am saying is that you don't have to invest in the stock market to get ahead. Now more than ever, it's time to be smart and protect yourself before you make sporadic decisions and lose a huge chunk of your investments due to chasing trends and hypes. Even the smallest losses in the market can add up to hundreds of thousands of dollars over time. Do not fear that you are missing out on opportunities that your family and friends might be jumping into. Instead, you should build up cash so you can buy in the near future when opportunities come once you have done your research. No matter what happens, there are going to be plenty of deals down the road. So it will be wise to build up liquid cash, especially with the current market. Now more than ever is the time to focus on cash flow and risk management. Protect your assets and build up your reserves. Pay off your loans. Stay liquid and stay safe. Turn off the news sometimes and step back from the market. And if you can't step away during trading hours, at least use post-market hours to get your mind and body engaged doing something else that is not stock market related, like working out, cooking homemade meals, and I don't mean Pop-Tarts, and do something that will rest your mind from the day. As the saying goes, health is wealth. And remember, my awesome people, just like all the information I mentioned in my videos, assess your risk, always diversify, and please do your own due diligence because I am just a clown on YouTube. Stay ranting.